Welcome to the first investor conference call post-result for Bandhan Bank. With me to share the views and the vision of company and to share the details of the results, we have got founder and MD and CEO of Bandhan Bank, Mr. Chandrasekhar Ghosh. Also, I have got Mr. Sunil Samdani, Chief Financial Officer of the company, joining with us. Now, may I request Chandrasekhar Ghosh, sir, to please give his vision and share the results to the community, please. Over to you, sir.
Good afternoon to all of you. I got the opportunities to talk after the first IPO results and the second full year result of the Bandhan Bank. So this is in good opportunities, and all of your cooperation and blessing helped us to reach this the result. We are, that the quarter portfolio, the last quarter, that is a Q4 portfolio, net profit has come 388 crores, which is the total year net profit has come 1,346 crore. And you know that the M2M loss, RBI permitted the banking industry to defer it to the next few years. But we have not, it have been deferred. We are accommodated in this year. After that also we are profit done 1,346 crore, and which is the 21% year-on-year growth of that. And the second point is there the deposit, we are now 33,869 crores deposit, and which is in a 45.8% year-on-year growth. Last year it was in a 23,750 crores. So loan, out of that deposit, we are mentioned on that, we are focused on that, the retail and the CASA, 72% retail and 34% CASA. Including, we are including the deposit as in some of the CPs there. And the next point is there the loan, that is advance, the 3,329 crores the credit. Out of that, the microcredit loan is at 27,701 crores, and the balance of the non-microcredit portfolio, out of that the SCL, small enterprise loan, you know that we have the 1 lakh to 10 lakhs loan, which is 1,639 crores, SME 1,641 crores, and the retail, that means the housing loan, loan against property, and two-wheeler and personal loan together 1,400 crores. So microcredit loan year-on-year basis increase in the 30% growth, and other loan, if you see that it has come from 2,000 crores to 5,000 crores. This is not in a percentage wise on that, but totally we say that the 86% of our portfolio is in microcredit and non-microcredit is in 14%. Compared to the last quarter, if we say that the fourth quarter, the third quarter it was in a 12% is a non-microcredit, has come 14% of the non-microcredit. It is a little bit growing good in a SCL, SME and the retail on that. Customer point of view, we have now the reach in March in the 13.01 million. And 2.6 million new customer we are added. Out of that, 1 million new customer added by 936 bank branches, and balance are added by microcredit 2,764 DSCs. And all of deposits, whatever we have that the 33,869, very small amount are contributed by microcredit customer, that is in 7% on that. We are focusing on that rural. You all together is a 936 and 2,764 DSC together. We say that all are banking outlet. That is called the 3,700 banking outlet. So I like to share with you, we are very happy to share it. That is, we are now, as per RBI information and data, we are the third largest banking outlet bank among the private sector bank. After the HDFC and ICICI, we are the third largest banking outlet. So this is our strength. We like to build up our future growth on the basis of this 3,700 outlet. We have a plan on that. Another 300 outlets we will like to open in this year. 936 branch will become 1,000 branches, and 2,764 DS will come to this at the 3,000. So whichever like to reach in the 4,000 banking outlet. We have it at 28,159 employees, and we know you know that we have a very focus on that, how we can build up the classroom on the basis of classroom training to build up the capacity of the employees and hand-holding. Both together we are continuing on that. We are set up one best training institute in Eastern region. Name is a Bandhan School of Development Management under our Bandhan Konnagar. So we are selecting the, according to the need of the bank, we are selecting the people graduate and taking them to this training by their cost. And they are received the training in the 1 year. 9 months is a classroom, 3 months is an internship. And the first 3 batch, that means the 210 people has joined in the bank after complete their internship, some of them. And we saw that a very good response we are get it on that. They are performing very good compared to the new people. It can be helped us this on the basis of this outlet and on the basis of these people's capacity and whatever we are initiative taken for training the next gen banker course, all together have helped us to grow in the next financial year is a very good. And you know that though we have that the 37% credit growth, but in this year, that means in the 17-18, little bit we are very conservatively grow because that the demonetization, GST, and the agriculture loan wave, and some these 3 factors affected the industry, even not only the microcredit industry, the banking industry also, because the small of the traders, they are suffer some of the cash flow because of supply of this type of amount is not that enough. So that we are little bit affected. So that it is we are very consciously taken call to conservatively lending the people of that. But though it is a very conservative, after that the last quarter has come into the very good amount of the portfolio, which is in field that the monsoon is also predicted very good, and that is in forecast is very good, and prediction of GDP is very good. So in that sense, we saw that the credit demand is coming. The last quarter shown is especially in the March are showing on that. This is also very good and realistic on that. And we feel that it is continue on that. And this year, the April, and the last year of the April, we saw that very drastically demand has come down, and our March figure has come down drastically, then below more than 1,000 crores. It reduced the portfolio from March. But this year we saw that, no, this is not that much is coming. Very much lightly is at par with the March figure continuing on that. That means demand is continuing on that. We are not pushing any in our practice to go to credit growth on that. So I feel that the credit growth is very good now. And third point I share on that, this is related to on that, that is an NPA, sorry, NPA, this is last quarter, that means last year is a little bit is an audit for us. And so that we are taking very good initiative on that, how we can be arrested. Now it has been arrested on that. And last quarter it was in a 0.76% of the net NPA, now come down 0.54%. It is amount-wise also reduced, not only the percentage-wise. And it is a very good trend because we see that we are tracking OTR, on-time repayment rate, means that today how many my customers are given one single installment who have the single installment due. This calculation we are tracking in every day and monthly basis and yearly basis that have been showing on that the nearly 99% OTR, on-time repayment, where we are not counting any of the overdue amount collected or any advance amount given to us. So it has been given to track on that, and it is improving gradually on that. So I feel that the NPA is not a very big issue, and the future growth will come as a good credit portfolio on that. And we trying on that to cost of fund has come down from last year to this year, 5.93 to 5.52. Fee-based income increased from 10.92 to 12.82. You know that we are started in the last year. That is our third-party product sale, insurance, and also the mutual fund, which also helped us to get this the good income. And if you see that the cost to income ratio also come down from 35.29 to 35%. NIM also little bit come down on that from 10.69 to 9.69. This is also some calculation issue is there. And all together we say that the ROA has come to this, the 4.06%. And ROE, we are calculating the 25.98%, that means 26% after incorporating of the IPO money. I feel that this is in the good way bank performed, and we are prudentially written off 51 crores in this year. So these are the point on that, but I feel that the next year the opportunities are more, and the conservativeness, whatever we played in the last year, it is over, and the people are ready, space also enough to grow. So we try to grow our asset and liabilities in there. So if you see that the other point is there, that is an standard asset as per RBI norms in a banking industry is a microcredit portfolio. There is an RBI circular says that the 0.25% we can provision, but we are provision higher, there is an 1%. So that whatever the NPA is there, the equal to my provision amount, so that it is not affect to my profit any time on that. So we need your cooperation and help. I hope that you have some question, and we can be like to clarify on that. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your questions. Anyone who wishes to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Ostwal from Nirmal Bang. Please go ahead.
Yes, sir. Thank you for the opportunity.
Sorry, Manish, we can't hear you clearly. Can you please speak on the receiver?
Yes, sir. Thank you for the opportunity. My question on the net interest margin on quarter-to-quarter and the full-year basis. In slide number 19, the spread net interest margin, it was in FY17, it was around 10.4%. Now it is 9.7%. Even quarter-to-quarter, it has declined. So, one is, what is the factor behind of decline in the net interest margin? Secondly, what are the sustainable level of net interest margin given the balance sheet mix?
Here, the net interest margin changes, particularly for Bandhan, on two counts. One is, of course, as the mix of non-microfinance portfolio increase, this will change. And two, and more importantly, which is the more bigger variable factor in our case, is the IBPC that we do when we downsell our portfolio. 96% of our portfolio, this year 94, qualifies for priority sector. So we downsell it to other banks who are in need of priority sector. In last year, we had done IBPC worth 7,500 crores. Reduces our balance sheet size, result of which the NIMs as a percentage looks higher. This year we've done more of PSLC, which gives you fee income, and and it does, the asset remains in our book. So it's a twin impact. One, the income on IBPC comes as part of interest income, which improves NIM. Two, as the denominator reduces because the portfolio moves out, the overall percentage improves. With that, this year, the corresponding positive impact comes in the fee income, which is where you see the spike in fee income as well. If this IBPC gets replaced with PSLC. Net-net, the impact of moving from IBPC to PSLC is about 50 basis points for us.
Okay. Second point, sir, in terms of branches, we have added almost 96 branches in this year, and going ahead also, this run rate we would like to maintain, or we can press the accelerator button in terms of branch expansion. And secondly, the operating expenses growth, which is 28% YOY, for the full year. So whether this 25 to 30% kind of OPEX growth is the trend for Bandhan Bank for next couple of years?
As far as the distribution in the branch network goes, we've done bulk of the investments in the branch network. At 3,700 banking outlets, we are the third largest distribution network in private sector bank. Going forward, we will open branch, but it may not be as aggressive as we had opened in the last 2 years. From 936 as on 31st March, we can go up to 1,000 branches by the end of next financial year. And on the expense side, since we have expensed out most of our investments in banks and branch infrastructure, so that will grow in line with our business. So there is no major expenses other than the regular business expense that we foresee.
Now coming to the growth side, so this year the disbursement growth has impacted because of the some issue with the spillover impact of demonetization, debt waiver in certain geographies. Now next year, what kind of disbursement growth we expect in the MF book, and secondly MF business, and secondly the non-MF book balance sheet growth, what kind of growth we can expect?
On the microfinance side, if you see, the bulk of the growth came in, that's when we believe is a full turnaround. So we expect the microfinance growth to be robust going forward as well. On the non-microfinance side, we did not set up any target for ourselves because that's a new business for us. As and when our capacity keeps building up, we will keep expanding that business. So that's an additional revenue line for us, the non-microfinance. So that will, of course, being a low base, the percentage growth will always be higher.
And this credit cost, any guidance you would like to give on credit cost this year 1.51% the credit cost for the full year. Now the demon impact is almost over. So, and the portfolio also showing a very strong collection efficiency. So, what kind of credit cost one should build in?
If you see that in our credit, the cost is there. That is in the net is in 0.76 was in December. It has come down 0.54. And net NPA. So in that sense, it has been arrested on that. Now it has been declining on that way. And this is not increase in that much. But we feel that the around one, it will be like to come highest it will become on that.
And last question for my side is currently the bank is reporting a ROA of 4% with a mix of 86% MF book and 14% non-MF book. So when we are looking 3 years to 5 years journey, and the mix will be in favor of the non-MF book, which is maybe 35%, 40%. So what kind of ROA one could see for the Universal Bandhan Bank? It will be 3%, less than 3%. What kind of sustainable ROA one should look at it? Because there is a piece which is unknown for us, is how the Bandhan Bank is building the retail non-MF book and the corresponding cost, whether the cost-to-income ratio is current level is sustainable or not, we don't know. So factoring all those things, what is your assessment at ROA in a 40% non-MF book, which is typically retail balance sheet of other products?
So my point on that basis, you should be take confidence from our previous data.
Right.
If you see that the last 17 years data, it has been not come any time has been below the 4% of ROA. So if you see that other point, cost to income ratio, the first year, we are always trying on that whatever the cost we are not deferred to any other year, it will be immediately affect to our book. If you see that the first year of a bank, we have a huge cost, but we have we can be with the RBI guideline and income tax guideline, we can defer the 5 years or 10 years, but we have not done it. We have been booked in a 1 year on that. So in that sense, the 56 was a cost to income ratio, and next year it has come to the 36. And now, if you see that the 36 now coming to the 35. So if you see that the 3 years, the trend of the cost to income ratio, so it is, you should be like to confidence on that and trust on that the bank is also doing on that. And other point, if I say that the add on this, my banking outlet 3,700. And all 3,700 banking outlet, out of that, the 936 is the bank branches, which are last 2.5 years we are built up. And we are spent a lot of cost to establish this bank branch. We cost of incurred on that to set up the people as a fresher and building them, and cost incurred for their training, capacity building. Now we earn from them. No, without increasing the space, without increasing the table, chair, fan, AC, electricity, internet connectivity, all are already we are spent. It is a normal course of that cost. And we are only take on that wherever now 50 people is coming to the bank branch for transaction. If it will become to 200 people, but without any cost, we are getting that advances. So that my cost is not increasing. This is the point. Third point, if you see that the cost of fund, so it is we are new bank, and our 36% CASA. That means other than this, if you see that there is some CD is there, if you not count in the CD, there is a 36% CASA is a new bank within a 2.5 year. 36% CASA means the good amount of the retail customer has come. 72% is the retail customer. That means our opportunities to reduce the cost of fund, which is come from 5.93 to 5.52. That is also advantage for as a bank. Fee-based income is increasing. So all together, and the efficiency increasing, the total new team and old team working together, and the best team we are made in a bank who are coming from the different other bank, and they are handling total bank and perform to this one. I hope that it is on that basis I can say that it will be try to continue in that way. And credit growth, whatever the last year has seen, and last year 51%. Last year we already mentioned the conservative. So is it not to say that the 50% credit growth would come in this year again because of the monsoon good? This is because of this the GDP is growth. Because of the my people in bank and matured in the 3 years. So all together, I feel that you will be take confidence on us.
Thank you, sir. Thank you very much for answering my question. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to limit your question to 2 at a time. We'll move to our next question, which is from the line of Parag Jariwala from White Oak Capital. Please go ahead.
Thanks for the time and congratulations, sir, for great result and great listing. My question is about the RBI dictate where you have to bring down the promoter stake. I know through newspaper etc. that we have applied for changes as well as for the extension. So can you just brief me about where are we on that?
See, we have to speak to Reserve Bank on this particular issue because since we've done the IPO recently, for 1 year the existing shareholders gets logged in. So there is no way that issue can change. And we have time till August, so we will approach RBI by then and seek their guidance and do whatever best as possible.
So we haven't reached to RBI yet?
No. We are not reached, but we are touched on that. They are not very much harsh about it.
Okay. Thank you. And secondly, sir, if you can see, now we are not mandated by the SEBI regulations. So can you throw some, quantitative guidance in terms of where do we see in terms of growth, margins, the overall structure of our ROA, ROE?
No, as a policy, we don't issue any guidance. But, if you look at our performance, we've been able to maintain our spreads product-wise. So that we've been able to do it year after year, and we continue to maintain our spreads. Depending upon the mix between micro and non-micro, obviously the ratios will change. But we are confident we don't see a pressure in maintaining spreads product-wise.
Thank you. We'll move to our next question, which is from the line of S. Parameshwaran from JM Financial. Please go ahead.
Yeah, hi, this is Samir here. Thanks for the opportunity. Just wanted to get a sense on how the non-micro book is shaping up in terms of geographies or product rollouts or any specific customers that you're targeting.
Samir, you see that there is a 3 segment we are addressing as a non-micro. And if you see that the SCL, there is a small enterprise loan, which is the 2 segments. One segment is that those are microcredit customer are graduate to the, they have the good demand, which is not meet up by the microcredit loan. So they are eligible to take it. There is a 1 to 10 lakhs loan amount size-wise on that. There is other than that, the new business means the new customer who are already been have the business. They are trying to expand the business or diversify the business. That is the one area. So that this is in one segment. We saw that a very good opportunities. We also grow more good, and so that is in one area is in non-microcredit. So as of now, we have the 1,639 crores of the portfolio in SCL, which is the last year we grow 60% on the basis of 1,000 crores in the last year. And the second point is the retail. Retail, we are bunch of some product and services we have been offered, and it is very good response we are getting. That is a housing loan and the personal loan, two-wheeler loan against property. So these are the four products in the bunch together is a retail. We have been developed one of the good model and tested in the last year with the 2 branches in one of the state of our country, and a good response we have to say that this is the plan now. This year we are have the plan to grow to set up some new branches with the same standard and standardized it and process and the product, everything, but good demand also. We feel that we will be like to also grow in that. And SME, there is some of the there is an SME loan is there. We can say that the MSME, micro, small, medium enterprise, and along with this, I also say that MSME because some of the microcredit organization, they are also taking loan from different banks, and we know about microcredit. We know these institutions. We are selecting some of these institutions MFI who are the good and they are system processes good and healthy portfolio, and we are setting up the new team who are driving to them and monitor, supervise, and accordingly we are also providing some credit. These are the 3 big areas we are going to increase the non-microcredit portfolio.
Okay, and just one data question. The average cost of SA deposits is 5.52, I believe.
Yeah, the cost of funds?
Average cost of savings deposits.
Savings deposit is about 4.9%.
4.9, okay. Thanks, thank you.
Thank you.
Thank you. A reminder to all our participants, if you wish to ask a question, please press star and 1. The next question is from the line of Ravikant Bhatt from MK Global. Please go ahead.
Sir, just a couple of questions, both on CASA. One, if you could share, how the sourcing happens in CASA, as in the geographic mix, whether it is intensive on the eastern side or other parts where you are acquiring from, and going forward, how do you see the acquisition intensity for CASA? How do you see this particular deposits shaping up?
No, if you see that the CASA in other bank also is a historically eastern region is a CASA pocket. In the other bank on that. So now after when we incorporated, we also see that in the eastern region, CASA book is coming very good on that, along with the other states. Second point is there, we are looking on that. There is as a bank, I already mentioned 3,700 banking outlet. Out of that, 71% banking outlet in rural. So we saw that a very good trend in a rural CASA is more coming from the rural, and that is also very steady. That is not in a fluctuate on that. So these are the 2 areas we saw that there is a very good trend of CASA and they are stable.
And these are not necessarily rural the micro banking SA balances. No. These could also be in the rural areas SA balances with average balances upwards of a few thousand, 10, 20,000 odd. Is that correct?
No, if you see that out of total deposit, my microcredit customers deposit is only 7%.
Correct.
No, so that it is not that much because we are not pushing any of the deposit liability product to my microcredit customer. We feel that If it is done, then my credit quality will be like to fall. People will be disbursed the loan, put the money in their account, and showing his target fulfilled. So that we are very concerned about it. We are not like to go do it. We are only mobilize these people to build up their habit, 10 rupees, 20 rupees, along with the loan installment they can be give. If any one day is in health is not good, that they will be like to deduct their account my installment. So that way we are processing on that. We are not doing as in deposit focus to the microcredit customer.
Sure. And sir, if you could just comment on how do you see the growth going forward?
Growth of bank?
CASA.
CASA growth, if you see that in the record in the industry, whatever we've done as of now, is in very much tremendous result has come from our bank. So it is not comparable with any other bank on that. So I feel that it will be like to continue because within 2.5 years, 36% CASA. So, and again, it is not possible, and again, maybe not in a justifiable in the next 2 to 3 years, again, it will be jumped to double on that. So, it will be because the denominator also increase, and we are focusing on that, how the people more transact in the bank. If they transact more, automatically their CASA deposit will come to this accounting. So, in that sense, 36 is a very good, I feel that the percentage-wise.
Sure. Thank you, sir. That answers my questions. All the best.
Thank you.
Thank you. The next question is from the line of Rakesh Kumar from Elara Capital. Please go ahead.
Please.
Rakesh Kumar from Elara Capital, can you please unmute yourself? Due to no response, we'll move to our next question, which is from the line of Anusha Raheja from LKP Securities. Please go ahead.
Yeah, thanks for taking my question. So what's the share of non-microfinance loan that you're looking at over the medium term? And also, would you like to, wide-base your products which you're offering there, like apart from personal loans, home loans, and the vehicle loans? And if you will see, the space is already very competitive, currently, because there are too many players offering all these products. So don't you think so, with the increase in the share of non-microfinance loans, you could see a sizable, downside pressure on the return ratios?
If you see that our non-microcredit loan portfolio, 14% of the total portfolio.
Yeah.
And next point, you are there the SCL loan 1 lakh to 10 lakhs. I have not in my knowledge which bank have this the portfolio, this type of product on that. Third point is there, the maybe product, but selling to the level of those steps, I hope that Bandhan is a very good strength for that. And we are managing it and growing on that. If you see that the 1 year before we started this product, the first year 1,054 crores and the last year it has come 1,639 crores, 60% growth year on year. I hope that it is a very good opportunities for us, not any competition on this segment. Only the competition in this segment, maybe we are found some of the NBFC. And that NBFC also not penetrate in a rural because their network is rural, reaching is a very, very challenging on that. But we are, as a microfinance institution, we are started from rural, recruited more people from rural. We have the good the strength in a rural people, and we are feeling on that. This is the opportunities for bank. SME I already mentioned. MSME major is there. That is a microfinance institution we are giving, and retail also is there. That is an. If you mentioned about the personal loan is not only for personal loan. We are not given the across the all customers. Personal loan we are given. Who have that we in the bank in the 3 months account we are tracking on that if they are suddenly needed, like the credit card facilities on that. So they are a good amount of the demand. We saw that, but we are very careful about it to system, process, and then disburse. And every product, there is a challenge in the banking industry to attract the customer, turn around time, how they are like to minimize on that. And that is interest rate not the factor for this type of the customer. So we are trying to reach on that. We are not feeling in this segment is a very high competition.
And to add, we are not saying that we are growing the non-microfinance book at the expense of microfinance. Microfinance will grow to fullest possible, it can grow. So it is not that if I don't do non-micro, I can grow my microfinance at a higher level more, or microfinance grow more. That's not the case. So this is an additional business which a bank is generating.
But still, some rough numbers, that internal targets that you're looking at, like my non-microfinance book at around 20% or 30%, say, over the next 3 to 5 years term period.
There is no hard-coded target for us because it's a new business for us. As and when the capacity builds up, we will keep growing this. But the way we see the opportunity in microfinance space growing and the base that we have there, we don't see these new businesses, for the next 2 to 3 years going beyond 25%.
Okay. And do you mean to say that, where you have the branches, the banking density is relatively less and hence, you are able to attract the customers and, get the better yields out of them?
Yes, because our presence is mostly in the underbanked district as a bank. 70% of our branch network is in, rural and semi-urban space. So that opportunity is always there. And the products that we are in, 1 to 10 lakh loan, not many banks focus on those customers.
Okay, just one last thing. Any internal assessment that you have done with respect to how much cross-sell, of the third-party products that can be done to the existing client base apart from what you have done so far?
We are newly started this product. And if you see that the bank have been started 2.5 years, but this product we have been started 6 months before. That means we are very consciously taking that call. We are not can be like to take the dissatisfaction from my customer. So that we are very closely watching on that. Not the sales target. Target is with a satisfaction target. So that is, we are tracking on that.
Okay. Thank you.
Thank you.
Yeah.
Thank you. Anyone who wishes to ask a question, you may press star and 1. Also request participants to limit your question to 2 at a time. The next question is from the line of Nishan Shah from Macquarie. Please go ahead.
Hi, congratulations on a great set of results, team. I have 3 questions. First, on geographic mix, given that most of the branch addition has already been done and we don't expect to have a lot many more branch additions, is it safe to say that the geographic mix will largely remain where it is, like eastern focused and northeastern focused rather than expanding into new geographies? That's question 1. Second is on ticket sizes. If I work it out correctly, I think the outstanding balances per account for the microfinance segment is about 40,000. Where are you comfortable to take these up to? Like, what's your comfort level given that we have a larger wallet share for the customer, for most of our customers? And the third is around center meetings. So what we understand from the street is that the discipline is waning a little bit. So is it true for Bandhan as well, or is it we are a superior institution compared to the remaining rest of the guys? Yeah, those are my 3 questions. Thanks.
Okay, 3 questions. I'll start from middle. That is not our the average loan is not 40,000. It is in 36,000. So point is there our microcredit customers, those are our borrowers. They are 73.22% customers are sole account in Bandhan Bank. For that reason, we are getting that very good number of customers is a matured and continue the cycle. So that average the 8 cycle they are maintaining with us. In that sense, if these people now maybe the 70,000 loan asking another 10,000 or 20,000, it is not a very harmful for us to give on that. So that is one point it is. Other side, if you see that our economy is growing 7.5%, and the inflation is coming to this 4 to 5%. So that sense, any growth of any businessman, they have a credit need also increase on the basis of that. So in that sense, it's not a very harmful to grow 30% and 40% on the basis of their base credit to the in the future. So I feel that it is a realistic because we are having that the good amount of matured customer. If you see that our customer all are new, then our loan size will be like too low. So these are the one point I say that. And the next another point, you're saying that
geographic mix. Yeah.
Huh? Which one?
Geographic mix of AUM.
So if you see that the geographic mix, we are started from eastern region and specifically in Bengal. So of course, after the 5 years, we have been gone to other states. So our matured customer and old customer in Bengal, their loan size also higher because the dropout rate is very low. So in that sense, our geographical area portfolio and they are very good. And if the business, other point is there, if you see that eastern region banking penetration is low, MFI, if you say that the credit on the MFI in that segment, compared to the other any states like in the south and that, there is an 1/3 MFI are working in that area. So that is also advantage to grow it there. So in that sense, we are a little bit high penetration in the eastern region. Along that, we are also expanding to others because we have now 34 states and union territory out of 32. So we are going some area very good is a liability product. We are focusing the liabilities. Some area very good is in microcredit product. We are focusing on the microcredit. Some area we are focusing on that. If it is needed on that, the housing loan, we are focusing on that. So we are assess the total geography according to the demand and the very potentiality to get the good business. Accordingly, we are opening the branch or asset center for credit. This is way we are doing to diversification on that. And
a third question on center meeting discipline, like what is the attendance records and stuff? Anything qualitative?
No, if you see that from beginning, we are till now continuing our weekly meeting. And second is the weekly meeting means customer or my borrower must be attend the group meeting. So if they will not send their children with the money, they cannot send the money with the other borrower. If they do it, we are not taking as a good customer. We are trying to convince them to regular attend the group meeting. So this is in our core area where we are liking. You know that the yearly we are conducting the workshop with the group leaders, how they help us to pick up the attendance in the group meeting willingly by the customer, not only say that by force you come and they are given the false attendance, not like that. Here it isn't like to clear on that. So we are not a compromise on that attendance in the group. If it is attendance has come good and discipline, automatically we are getting the opportunities to establish on that. So that is the advantage has given to us compared to the industry. Our portfolio quality, even the SKS issue in Andhra Pradesh, even the demonetization or GST, it is not that much affected the Bandhan portfolio.
Okay. Thank you so much, sir. Congratulations again.
Thank you.
Thank you. The next question is from the line of Dilang Mehta from HSBC. Please go ahead.
Thank you, sir, for taking my question. I just wanted to get some sense on your non-microfinance book in terms of retail lending. Are we using the credit appraisal process and the sales process? If you could just give some color on that. One is, while we are selling, is it mainly to the existing bank customers or deposit customers, or it is primarily to your microfinance customers? So what's the target segment? And the sales approach, is it through, the branches, or you have a centralized kind of a sales force which goes around, procuring customers through DSAs or some other channels?
Okay. No, first point I'll clear about it. Non-microfinance, everything channelized centrally through 100 asset centers. And if any, second point I would like to also clear about it, we are not to push any product to our microcredit customers. So if they ask, they can come to the different channel, that is the asset center channel, and process by them. And after the taken NOC from the microcredit branch manager, and then we are take that proposal as in disburse the loan on that. So this is very clear. We are not push selling anything to our microcredit customers. It is a little bit, we feel that it will be future risk on that. If they come, they can come to with their NOC, and they can will we say that the complete their last installment in there, then can become. And second point is that we have not any DSA. We have the separate staff every asset center, and they are selling it. Even also bank branch sometimes also sell it on that as a cross sale of their product. If someone asking to the branch asking that I'm like to get a housing loan, they can process it to the asset center independently assess and process, and then if it is possible inform to my central processing unit, and they are sanctioning authority some of the segment, and accordingly it is disbursed. But we say that there is that products, everything we are divided into two channels. One channel source and collection, another channel assessed and disbursed. So this is a two different channel of that.
Thank you, sir. That is very clear and helpful. The one more thing, just is it again the focus to sell more to then cross-sell to the deposit customers at this point of time? And if you can also tell what is the overlap between your deposit customers and your microfinance customers?
No, if you see that we are very differently also calculate on that, process on that. Microcredit customer primarily focus is in credit and not deposit. Deposit is their habit. We are organizing their habit to put some money, 10 rupees, 20 rupees, 50 rupees, along with the installment they can put to their account. This is a habit, not my target to increase the deposit from these people. And the bank branch is primarily in deposit. And when the customer has come for credit, they can be asked, or any other customer has come for credit, they can be processes on that. So these are the two different way we are specified, and accordingly we are processing.
Okay. And so one more last question I had. One was on provisioning, considering the volatility of the asset, our underlying customer base, while our credit quality has been superior, but we did see some stress because of demonetization and in last year. What's our provisioning policy, and do you expect to create buffers as we go along to ensure that that if there is a crisis kind of a situation, then you have a good provision coverage to start with to take care of that eventuality kind of thing?
No, as per regulator provisioning norms, on the standard asset based, that is in 0.25%, but we are provisioning 1%. So that we have a good buffer.
Okay. Okay. Thank you, sir. Thank you very much.
Thank you very much. Thank you.
Thank you. The next question is from the line of Sandeep Jain from Birla Sun Life Insurance. Please go ahead. Sandeep Jain from Birla Sun Life Insurance. Your line is in the talk mode.
Yeah. Hi, sir. Thanks for taking my question. My question on slide number 10. The full year disbursement, if I look at FY17, FY18, is higher than the overall AUM. And can you just explain what is our 2-year loan percentage in overall AUM, what is our 1-year loan percentage in overall AUM, how the repayment trends and all these things?
No, you are talking about the 2017 to 2018. So there is the increase of that is at 20% on that, no? 20.51%.
No. So FY18 total disbursement is 389 billion for a micro loan disbursement, and FY18 total AUM, total micro banking asset is 276 billion.
See here, these are weekly repayment loans. So typically on a door-to-door tenor, about 60% of our loan will be 1-year tenor and 40% will be 2-year tenor.
Okay.
But again, these loans are all weekly repayments. So the average tenor for a 1-year loan is typically 6 to 8 months, and a 2-year loan is about 12 to 14 months.
Okay. So if I do that thing, then 214, that is 213 billion being an opening AUM and 389 billion being an addition, and 276 is closing and rest is all repayment. So repayment is somewhere around 350 odd billion, right?
Yes, that's what the math says, yes.
Yeah. So 60% constitute 1 year, that's why it will always remain in there, because in FY17 also this is the case.
Yes, so that's what. The 1 to 2 year ratio is about 50% each.
40% or 50%, sorry. So it's 41 to 2 years is 40% loan, right?
Yeah, 1 to 2 years is 40% loan.
Okay. Okay. Sure.
Okay.
Thank you. The next question from the line of Jai Mundra from BNK Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So most of the questions have been answered. Just, on the question on open market customers, which are driving our CASA deposit float. So just wanted to understand, sir, how are you seeing the traction there in terms of, coming quarters? We have 2.4 million customer base in that open market customer. And how are you seeing the momentum kind of going ahead, sir?
In the last financial year, we added 1 million customer in our general banking segment. On an average, today we open about 7,000 to 8,000 accounts a day and steadily rising. So we see that customer acquisition growth very healthy this year as well.
Sure, sir. And sir, just if you have not mentioned, if you can share the cost of SA deposit on a blended basis.
4.9%.
Sure, sir. Thanks. Thanks very much.
Thank you. The next question from the line of Harish Kapoor from India Infoline. Please go ahead.
Hello.
Hello.
Hello, sir. Sir, just want to know, so you have given your branch mix, but I just want to know in terms of the deposit mix geography-wise, east, south, west, north and northeast. Could you just split your FY18 book?
In terms of,
percentage of the deposit, geography-wise.
A little bit wait on that. We are
West Bengal contributes about 44% of total deposits, followed by...
West is 44?
West is 44.
West Bengal.
Followed by Maharashtra, which is 16.8%. And then there is Assam and Bihar at 5% each.
Okay.
So it is better on that if you can see that our banking outlet where is what percentage. Accordingly, it is coming, but it is also sometimes differ on that.
Sure, sir. Thanks for that. I just want to know, so in terms of the other income that we have booked, could you just maybe give the split in terms of, maybe the core fees, PSLC, and, how the movement has happened this year compared to last year? And maybe any other component which is there?
There is a major point on that. This is coming on the processing fee from the loan. And the second point is coming the IBPC or PSLC. Last year IBPC more, this year PSLC more. And the third point is there is in this year we have started for third-party product sale, that is mutual fund and insurance. So there is an also fee has come. So these are the all together is coming on that.
So could you just quantify the amount?
Okay.
About 370 crores comes from processing fee. PSLC was 151 crores. And rest is others.
And, okay, 370 crores for this year, processing, 151 crores is PSLC, and the others is third party. Okay.
Third party, treasury, and other liability-related income, account-related.
And how much was the processing fee last year? Hello?
Yeah, please.
Yeah.
Last year was about 320 crores.
And the the PSLC or IBP for last year?
There was no PSLC last year.
Okay. Fine. That's it from my end. Thank you so much.
Thank you. The next question is from the line of Harsh Modi from JP Morgan. Please go ahead.
Hi, thanks for the call. I had a simple question. The current ticket size that we have on micro loans of 36,000, how do you see that evolving over next couple of years? And second, on the duration, you said you had 60-40 mix on 1 and 2 years. How do you see that evolving? And more importantly, how do you decide which borrowers get a 2-year loan versus a 1-year loan? And is there any difference in the yield of depending on the tenure?
Tenure is in two way on that. One way is there if the loan amount is in higher. So normally customer is asking 2 year because the loan installment size will be come down. Second point is this, it depend on cash flow of that business. So we are assess the cash flow of the customer. Accordingly, we are permit on that who will get that 1 year, who will get that 2 years.
And the yield and the interest rate charge for a 1 or 2 year loan is same.
Right. So is it fair to say then the larger ticket size loans are also longer duration broadly? And
yes.
Have you seen older customers gravitating towards longer duration and larger ticket size loans?
It is not only depend on that. It is depend on that the customers how they are feel it to take it on that, because some customer are feeling on that the ticket size normally is correct, but some customer feel that 1 lakh rupees loan, but their cash flow is a very early has come and they are taking it as a 1 year loan.
And in terms of industry or segments where customers with bigger ticket size loans are and the longer duration ones are, is there any differentiation that if it's more agricultural, rural, it is more shorter duration, if it's a grocery store equivalent to Abhisar? Is there anything segment-wise which you think is different in terms of tenure?
No, we are not getting in that way, but if you see that the other way, if anyone taking a loan for milching cow, they are maybe asking in the long term, because short-term game is not there. But if you see that the milching cow who have already been 3 cows, they are asking short, because they have the income in that for other 2 cows, and they are taking on it. So that is a different business-wise, and of course it isn't, you are mentioning on that the agriculture. And agriculture loan is always try to take as a 1 year, not more than 1 year. Other than this, the milching cow.
Got it. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Sunil Samdani, CFO, Bandhan Bank, for closing comments.
So thank you, gentlemen. Thank you for taking your time out and coming for the call. We look forward for your continued support. Thank you.
Thank you. On behalf of Bandhan Bank,